Good morning. You're watching Market Cafe with me, Shreyansi Singh, and my co-anchor Snehi Shah.
And yesterday, not much happening over there, rather flat moves when you look at the US markets this morning. The Dow Jones Industrial Average, however, rose to a new high on Monday as investors awaited fresh inflation as well as earnings data. So the 30 stock index advanced almost 125 points or 0.3% higher to settle somewhere around that 37,800 mark. The S&P 500 inched lower, however, by just 0.1%, not much happening over there. And the Nasdaq Composite also slid 0.3%. So, well, yeah, flattish moves coming over there. Good run for the Dow Jones Industrial Average, but other than that, not much happening in the US market. And sometimes, Shreyansi, well, not much happening is also something that our markets need this morning, because we usually take cue from the global market depending on how they work, wheel open, so that doesn't get out of style usually. And let's talk about the intraday moves as well. The Salesforce dragged the Dow lower with the cloud-based software stock sliding 1.4%. Shares of Hershey slipped less than 1% following a downgrade to underweight from Morgan Stanley on the back of softer demand. And remember, on Friday the S&P 500 closed above 5,000 for the first time in history. So that momentum is continuing as we see. The broader index has now risen by about 5% since the start of this year itself. All three major averages are coming off their fifth straight week of gains, with the S&P 500 and Nasdaq respectively adding 1.4 and 2.3% last week. The Dow also edged fractionally higher, and well, some 61 names in the S&P 500 are set to report earnings in the week ahead, including gig economy stocks like Lyft, Instacart and DoorDash, and companies such as AutoNation, Kraft Heinz, Hasbro, Coca-Cola. So big companies and big numbers also expected. They will also shed light on the state of the US consumer retail sales production, imports, exports, housing starts, and the producer price index, or the PPI, which is the other component of the inflation index. So, well, this is what largely the US markets have done. And when I should focus and look at the European markets, I only see green on my screen. So that's another positive indicator coming in for us. DAX up 0.6%, FTSE rather flat, not doing much, but held on to the green nonetheless. CSE 40 up 0.5% as well, and the overall stock 600 index, the overall index of the European markets, up almost 0.5% in the green as well. But Shreyansi, we were out and about in yesterday's trading session, but well, the Nifty implied open is showing a rather flat start for us today, so let's see how that pans out for us. But with that, tell us what's happening with the world of crude as well.
Absolutely, it's very interesting what is happening with the world of crude, because when you look at crude prices, you've got oil prices that were largely flat, and this was after rallying more than 6% last week on escalating Middle East tensions. Now, when you look at the WTI contract, that gained about 8 cents and settled around that $76 a barrel mark. When you look at Brent as well, that settled around that $82 a barrel mark. And US crude and the global benchmark popped last week after Israel rejected Hamas's proposal for a ceasefire and vote to press on with its Gaza offensive to the southern city of Rafah, which is located on the border with Egypt. Now, that is largely what is happening with oil prices. And oil prices, mind you, have struggled to break out of a $10 trading range despite tensions in the Middle East. So that is also something that is playing out. And when you look at gold prices slipped on Monday. And this was ahead of the US inflation data that you mentioned, Snehi, and comments from Federal Reserve officials that could offer insight into the central bank's interest rate plans. And in terms of other asset classes, of course, you have Bitcoin. And Bitcoin jumped above that 50,000 mark at one point, reaching its highest level in more than 2 years. So that's all the action in oil, gold, as well as Bitcoin.
Well, absolutely. With that, let's also take a look at all the important events that you need to be keeping on your radar today. And well, when we look at cues coming in from India, we've got the trade data that's expected to come out today, so we'll be watching out for that. Global cues, then the MSCI rejig is all done, and later in the show we'll also tell you about all the stocks that were included and excluded and the surprises that came out this time. As you can see on the ticker, you do have MSCI changes flashing down there, so all the live updates are there for you. And well, like we mentioned earlier, the US CPI numbers will also be coming out anytime soon, so key metric to watch out for. And let's shift focus and talk about the earnings calendar, because well, today you have Hindalco Industries as well as Eicher Motors reporting their Q3 numbers today, and tomorrow you've got auto player M&M as well. So these are from the Nifty pack, and today is also the last day to be eligible for dividend for a whole host of stocks, the likes of SMC Global, Gulf Oil, Sundaram Finance, Tube Investment, Tamil Nadu Newsprint, KPR Mill, Orient Electric, Dr. Path Labs, and the likes of those. And we should focus to the primary markets then. You've got one IPO that's going to be closing today and a fresh one that's going to be opening for subscription. The Entero Healthcare IPO that will be that will be closing for subscription today, and the Vibhor Steel Tubes IPO will be opening for subscription as well. And when you look at other events, well, PM Modi is going to begin his 2-day visit to the UAE today, where he's going to be inaugurating the first Hindu temple in Abu Dhabi. So we'll see how that pans out for geopolitical trade as well as its impact on the stock market as well, Shansi.
Absolutely, and let's get started with top global stories then that we're tracking this morning. Important commentary coming in ahead of the US January CPI print as economists factor in a 0.2% month-on-month increase. The set figures will help the Federal Reserve decide on the direction for rate cuts. IMF's Geeta Gopinath says that despite easing inflation across countries, central banks should move cautiously on any interest rate cuts. Looking at the United States and the strength of the labor market and consumer demand, Gopinath said it would make sense for the Federal Reserve to move cautiously and hold off on rate cuts until the second half of 2024.
Well, staying with the commentary on the central bank activity, Federal Reserve Governor Michelle Bowman sees many risks in the central bank's battle against inflation. Given the uncertainty around macros, he adds that it is too soon to project the quantum of easing. She also said that joining the slew of officials and global leaders, she believes that the rate cuts will not be appropriate in the immediate future.
And shifting focus to some stock-specific action then, with indices notching near all-time highs, global tech giant Nvidia overtook Amazon in value for the first time in 2 decades. Nvidia's market value surpassed those of fellow technology titans Amazon and Alphabet, an almost unbelievable feat accomplished as Nvidia's stock more than quadrupled over the last 15 months as investors bought into the company's market-leading position in artificial intelligence.
Well, from equities, let's shift focus to the world of cryptos because the world's largest crypto asset, Bitcoin, has today, Shansi.
Absolutely, and let's zoom in on a conversation.
Right. So what is your perspective on where you see Truecaller growing in India, and what really explains this exuberism?
I think most of the world have misunderstood India for a very long time. They haven't necessarily seen the progress in the same sense. Because we have such a large base here in India, because we have so many users, so many communities, we see India from a very different perspective. And on top of that, both me and Alan have a very big passion for India. So I think in that sense, we've been always seeing things differently.
One final question on investments. You said that you're looking to deepen your investments in the country, operations in the country. Could you quantify that?
Well, in the past couple of years, our investments in general in our research and development, in increasing our operations, have, I would say, in the past 3 years, gone up by over 100%. And we expect that trend to continue, and we expect majority of all of that to continue to happen in India.
All right, well, an interesting chat coming in from the management of Truecaller. We'll show you more excerpts of that chat later in the day as well. But with that, we'll slip into a very short break on this edition of Market Cafe. You stay tuned because when we come back, we'll mark how the Asian markets have opened up this morning. So you stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at the MSCI reject then. MSCI has announced its index reject for the month of February. What are the key additions or exclusions, and which are the stocks that will see the highest volume action? Somit is standing by with that roundup. Somit?
Well, the MSCI changes have been finally announced, and adjustments regarding these changes are expected to happen on February 29. Now, if you see, India is expected to see an inflow of close to $1.2 billion, and India's weightage in the MSCI index is expected to increase by around 30 basis points to 18.2% from earlier weightage of around 17.9%. Now, when it comes to the global standard index, GMR Airports is a surprise entry in this index. In fact, apart from that, if you see, it's PNB, NMDC, BHL and Union Bank which are included in the MSCI Global Standard Index, and inflows for these stocks are expected to be anywhere between 149 to 187 million US, which is nearly 1.4 to 3.3 times the 20-day average volume. Now, GMR Airports, which is a surprise entry, is expected to see an inflow of close to 148 million US dollars, which is nearly 3.1 times the 20-day average. Now, because of this additions in the index, there are some changes when it comes to the weightages also. Now, Zomato, DLF, MRF, Hindalco, Indigo is expected to see their increase in weightage, which could lead to additional inflow of anywhere between 37 to 86 million US dollars, while Geo Financial Services and Container Corp would see a decrease in their weightage, which could lead to an outflow of anywhere between 23 to 73 million US dollars. Now, apart from the global standard index, there are a host of changes when it comes to the small cap index. Some of the names which could see the highest or the most volume action on the back of inflows include Healthcare Global, which is expected to see an inflow of close to 2 million US dollars, which is nearly 3.2 times the 20-day average volume. Apart from that, it's Jupiter Life, NetWeb Tech, Dhanuka Agritech and Ethos, which are expected to see an inflow of close to 2 to 3 million US dollars, which is nearly 1.6 to 2.8 times the 20-day average volume. Now, on the exclusion side, it's Torrent Power, Barbic Nation and Prestige Estates. Now, outflows are expected to be in the range of 8 times that 20-day average volume. So, keep an eye out for these stocks in trade.
Thanks so much for taking us through that list. We'll be watching out for all of these counters in today's trading session. But another stock that will be in focus today is India Bulls Housing Finance, because the rights issue is going to be closing today.
Now, if they want to increase exposure to its India Bulls Housing, then they have to subscribe to the rights issue and keep a track of the next payment date, which could come anytime over the next 12 months time period. If they do not want to, if they actually want to decrease their exposure towards India Bulls Housing, then they should sell the original shares and actually subscribe to the rights issue, because they'll hold less number of shares, and this will also free up some capital for them going forward. Now, if they want to maintain their exposure in India Bulls Housing, then they should subscribe to rights issue shares and sell similar quantity of original shares. For instance, if an investor owned around 50 shares of India Bulls Housing originally, then they would have got additional 25 rights issue shares. So they should sell 25 original shares and subscribe to rights issue shares. This will also free up some capital for them going forward. Now, also going forward, the partly paid shares of India Bulls Housing Finance are expected to list on both the exchanges by the end of this month, and investors could get a profitable exit even in the partly paid shares seen in the past instances. Like for Grasim and Bharti Airtel, the partly paid shares are currently trading at a profit compared to their earlier price. So keep an eye out for India Bulls Housing shares. The partly paid shares are expected to get listed by the end of this month.
Absolutely, Soumit. So we'll definitely be keeping an eye on India Bulls Housing, but let's take stock of how the Asian markets are faring right now. Now, Asia Pacific markets mostly rose as more markets returned to trade from the Lunar New Year holiday, including South Korea and Singapore. Japan's corporate goods price index rose 0.2% in January. So let's take a look at Nikkei. Nikkei surged 1.8% on open and crossed the 37,000 mark and pushed 34-year highs. So Nikkei is up about 2% as we speak. We should be able to see that on the screen soon. When you look at South Korea's Kospi as well, it was up about 1.2% as it returned to trade. And when you look at ASX 200, that started the day down marginally, but it's now steady as we speak. And markets in China are, of course, closed for the week due to the Lunar New Year holiday. And Hong Kong is closed but is set to resume trading on Wednesday. Let's take stock of Nikkei that we discussed earlier. It surged about 1.8% on its open and is up about 2% on your screen as we speak. Now, yesterday we closed on the Nifty. We closed around the 21,616 mark. Of course, the top laggards were PSU Bank, public sector entities, as well as some resilience that we saw on the other side from the pharma and the IT space. So, GIFT Nifty implied is indicating a muted open at this point, an open around 21,729. So, that's the indication coming in from the Nifty implied.
Well, absolutely, Shreyansi. On a spot basis, a rather sluggish start indicated for us on a futures with the street. At 9:40 a.m. then we'll be joined by the management of Samil, Pankaj Mittal, the COO, as well as Kunal Manali, the CFO, and they'll be here to talk about the company's Q3 numbers and their guidance going ahead. At 9:50 a.m. we'll keep it with the earnings and we'll talk with the management of Tata Chemicals. R. Mukundan, the managing director and CEO, will be joining us to talk about the outlook going ahead as well. And at 10 a.m. then we'll be joining with the management of Spandana Spurti, Shalabh Saxena, the MD and CEO, and he will be here to talk about the company's Q3 numbers as well and the outlook going ahead as well. And lastly, at 10:20 a.m. we will be joined by the CFO of Dixon Technologies, Mr. Saurabh Gupta, also here to shed some light on the company's Q3 performance and what we can expect from the company going ahead. So, a power pack lineup for you. prominent market voice as well as lots of managements here to talk about their quarter 3 numbers. So stay tuned to the channel for the entire course of the day today.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at retail inflation for January then. And retail inflation for January came in lower at 5.1% versus 5.69% that we saw in December. The mild downtick in inflation is led by softening of food prices. So when you look at January food inflation, that rose 8.3% versus 9.5% in December. Meanwhile, when you look at core inflation, that stood at 3.6% versus 3.9% in December. So let's listen into a slice of a conversation that we had with a couple of experts on this particular issue.
Basically, the elevated inflation that you're seeing in vegetable prices is something which has surprised me on the, on the upside as well, because we were expecting CPI to be a tad below 5%. And when I look at the breakup, most of it has basically come because of higher food inflation. And that's not only vegetable, unfortunately, it's also because of, what you're seeing in eggs and pulses as well. To some extent, the, protein inflation is also driving it. And to some, ideally, we should have seen a sub 5% inflation. But I think if you look at the, sequential behavior of vegetables as well, generally in this period, seasonally, vegetables tend to anyway come down. But the seasonality is also not playing to the extent that it has been in the last 5 years average. So, to some extent, elevated vegetable inflation is also preventing sustained disinflation in food.
Even more than food inflation, of course, I mean, there is a little bit of a worry because normally in the winter months, in the winter months, but much more important, the way that core inflation is deflating, the disinflation that we are seeing in the non-food, non-fuel core inflation, that is what I probably think is going to give a lot of comfort to policymakers, monetary policy, fiscal policy, etc.
Well, all right, that's the word coming in from the experts on India's inflation figures. But let's take a look at what brokerages are flagging off for us when it comes to this metric, India's January CPI. We've got Nomura saying that it's slightly higher, it's a slightly higher headline, but the details lie in the softer margins. The inflation may remain capped in February, but growth is largely resilient for now. And they're also saying that CPI looks like it's going to converge with the core CPI at roughly around that 4% mark after the month of June. They say that the monetary policy to follow the liquidity pivot, so we'll be watching out for all the rate decisions going ahead as well, and the monetary policy committee meetings will be the ones that will be the key metrics to watch out for. And well, let's move on from Nomura and talk about Bank of America, because they've also come out with a brokerage note on this inflation figure, and they're saying that the inflation softened to 5.1%. Core inflation also fell further. The December IIP growth, that's the industrial growth, improved to 3.8% on year basis, and that has come in largely beating expectations. They're also saying that they're not seeing any big inflation surprise to keep the RBI MPC on hold, and barring big surprises, they see that the monetary easing, they're only seeing monetary easing when it comes to the second half of FY25. So that's some positive outlook coming in from BofA Securities over there. Now the big questions and the key ones to answer will be, is the RBI succeeding in its goal of taming inflation? When will food inflation come to acceptable levels? And well, do today's numbers further delay the rate cut possibility? We'll be watching out for all of these questions. And
Action against Paytm Payments Bank. Addressing a press conference after the meeting with the finance minister, he said that RBI will come out with FAQs related to Paytm soon. Listen in to what else he had to say.
बहुत सोच समझकर हमने फैसला लिया है और अनाउंस करने के मतलब 10-15 रोज के बीच में कोई रिव्यू, वो जो आपने कहा वो रिव्यू की कोई यहाँ पे आई थिंक वो जो वर्ड है रिव्यू अप्रोप्रिएट नहीं होगा, लेकिन मैं उसके साथ साथ ये भी कहना चाहूँगा कि आप जो FAQ हम इशू कर रहे हैं उसके लिए आप वेट कर लीजिए और फिर उसमें जो सारे कठिनाइयाँ हैं कस्टमर्स को, हमारा प्रायोरिटी ये है कि कस्टमर जो है, डिपॉजिटर जो है, उनको किसी तरह की असुविधा ना हो, इसीलिए हमने 1 महीने का टाइम दिया है। एक्शन 31 जनवरी को लिया, 29 फरवरी 1 महीने का टाइम दिया है।
Well, that's the word coming in from the top boss at the RBI. But meanwhile, as the press conference addressing the ongoing Paytm saga, RBI Governor Das emphasized the RBI's commitment to fostering fintech sector growth while ensuring customer protection. My colleague Prakash Priyadarshi has more details on this. Prakash, over to you.
Very significant development coming in, as RBI governor has made it clear that there is no such proposal before him to review the decision that has been taken in the context of Paytm Payment Bank. He has said that proper consultation has been taken place before taking such decision. All the factors have been taken into account. There were some issues which with regard to regulatory norms and compliance that have been taken into account before taking such decisions. So there is no such consideration to provide any relaxation or review this decision going forward at this point of time. Along with that, he has also informed that the RBI is going to issue a proper FAQ in this context just to address the issue which is with regard to a common customer. A lot of doubts are there which is floating, which is there in the minds of the common customer, which is with regard to future of Paytm Payment Bank, Paytm wallet, the money which is parked there. So the RBI's FAQ, which is going to be released in next few days, will address all these issues.
Absolutely. Thanks, Prakash, for that roundup. But let's delve deeper into the Paytm saga after a Kirana Club report claiming 42% of Paytm merchants looking for other partners. The company is making all efforts to assure that there will be no disruptions. Paytm has also claimed support from big brands, the likes of Arvind, Smash, Biba, among others. Ankur Mishra is standing by with more details. Ankur?
Yes, in a bit. And also, it has been mentioned that after the deadline, which has been set as February 29, there will be no disruptions for merchants, and there will be no changes which is needed to be made at the back end for merchants. Now, for that, the company has said that they do not need to revisit the existing setup as wherever Paytm Payments Bank is involved, the company is looking for other lender partners so that there is seamless transactions as it was happening before for the merchants. Now remember, there was a report which was claiming that 42% of Kirana stores in India have shifted from Paytm to other apps. Now this report has also garnered attention from many of the merchants, and now the company is reaching out to merchants and claiming that there will be no disruptions for the company even after February 20 deadline, which has been set by Reserve Bank of India. Remember, Reserve Bank of India has said that after February 29 there will be no transactions in the Paytm Payments Bank, which includes deposit as well as credit.
Well, thanks Ankur for taking us through that. We've seen some bad blood for Paytm on the street over the last couple of days, and well, on the back of that news flow, the stock amid a market like yesterday's managed to still end in the green. So let's see how that pans out today. But let's shift focus and talk about Coal India, because its Q3 earnings will be there, where the revenue has come in line and margins have exceeded expectations. So those numbers have come out, and the company has also announced a second interim dividend of 5.25 rupees per share. Ashesha is here to do all the number crunching for us. Good morning, Ashesha. Please break down these numbers for us.
Well, yes, Coal India has reported good set of numbers. Revenues are largely in line with what the street was working with, but margins over here, it's a big beat versus street estimates. So company has reported margins at about 31.5% versus ET Now poll of 27.5%, and even on a sequential basis, it is a big beat as far as margins are concerned. One of the reasons, of course, is the increase in shipments this time around. So shipments have risen by about 10% on a sequential basis, and analysts were working with e-auction premium decline, but e-auction realizations have risen by as much as 17% on a sequential basis, and that has also aided numbers this time around. All in all, numbers were very good. FSA volumes rose by 11%, e-auction realizations were up 17% on a sequential basis, and most importantly, margins have beat analyst expectations.
Absolutely, Ashesha. Thank you so much for that roundup. But stay with us for now. Hindalco will also be in focus on the back of its earnings report today, and strong commentary from its wholly owned subsidiary Novelis. So take us through the highlights of this particular earning also.
Yes, Novelis has reported largely in line set of numbers. Shipments have declined 2.5% on a sequential basis, but that was largely on expected lines on account of, so they maintained their EBITDA per ton guidance of $525 per ton. In fact, the management also said that because of the efforts that the management is taking, their adjusted EBITDA per ton could rise above $600 per ton over the medium term. So internals are quite positive. Demand continues to remain robust. Automotive, aerospace demand is quite strong. Destocking is now behind us. So management commentary clearly is quite positive. Apart from this, there's one negative with respect to their capex announcement. One, of course, for FY24, they've gone ahead and reduced their capex guidance. Apart from this, they had announced a capex sometime earlier, where 600 KTPA capex, and now the company is facing cost escalation. In fact, Jefferies has come out with a report where they say that Novelis expects the facility to now cost 64% more than what the company had earlier anticipated, and the project is expected to start in the second half of calendar year 26 versus first half of calendar year 26 that the management had indicated earlier. So this is one bit of negative, but otherwise numbers are good. Management commentary is also quite positive. Let's also talk about standalone numbers. Remember, Hindalco will be reporting its numbers later today during market hours, where standalone revenue is expected to come in at about 20,000 crores, marginal 2.5-3% decline on a sequential basis, but we are expecting margins to expand this time around. Standalone margins could come in at 9.7% versus 8.5% that the company had reported in the second quarter. Copper segment performance is expected to remain strong this time around on account of strong pricing and demand. Aluminium prices too rose by about 2.5% on a sequential basis, so that too will aid numbers for Hindalco this time.
Alright, Ratisha, thanks so much for taking us through that. We'll be watching out for Hindalco's numbers on the back of its earnings in today's trading session as well. But with that, we'll slip into a very short break on this edition of Market Cafe. We'll be right back with more stock-specific news and updates, so stay tuned.
Welcome back. Still tuned into Market Cafe on ET Now. Well, let's take a look at how the futures and options roundup is shaping up. And for that, we have Ansh with us. Ansh?
Right. So if you will see the Nifty chart, then the index has actually given a strong correction in the previous session, and it has also slipped below its 20 DMA, where it was taking good support before, like 2 sessions before yesterday's session. So here we are seeing good support at 21,500 to around 21,470, where 50 DMA lies. If we break this level, then good support seems to be directly at 21,230 level. Whereas on upside, we are seeing resistance at 21,800, followed by 22,000 psychological level. Let's see what future data is saying. In index futures, we are seeing open interest increasing by 1.4%, indicating short buildup, which is a bit of negative sign. Whereas in index option, we are seeing call writing happening at 21,700, followed by 21,800, indicating traders expecting Nifty to take resistance at this level. This is the same level which is matching our chart level as well of 21,800 as a strong resistance. Let's have a quick view on Nifty Bank chart as well. So if you'll see the chart, Nifty Bank has actually closed at 200 DMA, and from last 3 sessions, it has been taking good support at this level. If we break this level, then we are seeing a very good support at 44,400, which is just 400 to 500 points away from current level, over 70% from 165 crore directly to 46 crore. Dilip Bilkon is also in focus, as a revenue is being reported at 2,877 crore, which is up by almost 24%, whereas the net profit is slightly up by 2.4%. Sansera revenue is up by 27%, and net profit here we are seeing a jump of over 50%. Lastly, JM Financials will be in focus, as here revenue we are seeing an increase of 33%, and net profit also increasing in the same line of 33%. Lastly, let's talk about Coal India as well. Here we are seeing revenue increasing by 2.8% and net profit increasing by 17%. The revenue is in line with the estimate, while EBITDA and PAT is above the estimate. So keep an eye on the stocks.
Absolutely, Ansh. We'll keep an eye on all of those counters, but that's all the time that we had on this edition of Market Cafe. From me, Shreyansi Singh, my co-anchor Snehi Shah, as well as the entire team that put the show together. Thank you so much for watching. Don't go anywhere, because the market takes the action forward.